I'm live. Hi everyone, good morning. If you're just joining in, let us know your location, your startup name, and what you do so that we get to meet the wonderful startups here. I know we have both startup policymakers and investors joining this session. So if you are joining in, let us know your name, what you are doing, and your startup name and location. So our host is trying to rejoin, and our speaker too. He's trying to rejoin. He's having a little challenge with his internet. Okay, we are waiting. Let us know your name and where you're joining in from. So, Mimi, are you ready?
Yes, I am. Good morning, everybody. Um,
Okay, so over to
yes.
you.
All right. Good morning, everybody, and welcome to this webinar. Just like Mr. Pascal was saying earlier, if you're here and you're just joining us as a startup, an investor, and an entrepreneur, or whatever you're doing at the moment, we would like to meet you. So, if you can, just send us a message. Let us know you're here. We want to meet you, and you don't know. We just might have future collaboration to do together, partnership or whatever it is. So just let us know if you're just joining us. My name is Mimi Okana, and I will be hosting this webinar today. Our speaker is on his way. He'll be here very soon. He's having a little bit of an internet problem, but he'll be here very soon. But I mean, we're all here, and we're about to have a great moment and a great time as well. So please, if you're here, just let us know. The name of the organization, your name, and everything else. I do not want to be the only one here, and so I want to meet you. Do well to send a message if you can, or join in, or whatever means. But just um, we want to meet you. That's a conversation. Our speaker just sent a message and said he will be here in a few minutes. So let's give him a few moments to be here. And one of the most amazing things about this, webinar that we always do is the fact that we don't just bring people who talk, we bring people who offer solutions. So this is not just a random conversation or a random webinar. It's a webinar that's very focused on solutions as much as we identify problems, in startups and business and generally in how to build um, better lives. And yeah, basically that's why we ensure that every time we host this webinar, we bring the best people for such conversations that are very timely and offer solutions to problems that are budding. So, but we can't do that for you, or we can't just keep talking without meeting you, because we do this all the time and we like to meet the people who join. So if you are just joining us again, please introduce yourself, your organization, what you do, and just any other thing you think we should know, and we can you know go on with this, right? Mr. Parker, are you there? Can you hear me?
Yes, I can hear you.
Okay, I just want to be sure that we are hearing each other before our speaker comes, because our speaker said he will be here very soon.
Okay, so while we're waiting for the speaker, we want
Yes,
to hear from you. What are your expectations from this session? Those joining in, let's hear from
yes,
you.
yes.
Mimi,
Yes. But before they tell us their expectation, I want to know your expectation, Mr. Pascal. What is your expectation for the conversation we're having today? And yes, our speaker is here.
oh, we have Segun. Hi, Segun, good morning.
Guys,
Hi.
good morning. Good morning. Good morning. How are we
Hello. Good
today?
morning. We're very well, thank you.
Good,
Yes.
good, great.
Um, yes. And we have been, preparing for your arrival, and it's good that you're here. Welcome. Good morning, and thank you for joining us today. Yes. We have a couple of people joining us,
Morning.
and yes. Good morning. My name is Mimi Okana, and I'll be hosting the session today. And I'm so glad that you are speaking to us today because um I had gone through your profile on LinkedIn, and you are doing such an incredible job, and it's so amazing that you're going to be speaking to us today. And it's so incredible that you are not just telling us what you don't do, but really what you do. It's incredible that you're here. Thank you so much for coming, Mr. Segun Cole. Yes, can you hear me? Um, Mr. Shagan, it looks like you are having a glitch. Just let me know if you can hear me. Maybe send a message. Okay. Maybe, can anyone else hear me or is it just me? Okay. I think Mr. Shagan is having an internet challenge, but I mean, he'll be here very soon. Understand how this internet situations can be sometimes, but I mean, we're here and Mr. Pascal is back.
Yeah.
Yes,
So
you're
while
back.
we are waiting for him, while we are
Yes,
waiting for him, we want to hear those that are here. A lot of people are joining in.
yeah, they are.
Iyobosa, Damilola. Let's hear you guys. Your name, your
Yeah, you're
location, and what you do.
yes, your organization and really what your expectations are regarding today's conversation. We want to know, and that's why we're here. So send a message if you can, or whatever you know you can do to reach us. But please, we need to know that you are here, and we really want to meet you and really just connect with you. Okay, we have a message from. Let me check that real quick.
Okay, I think the network is really disturbing today.
Yes, it is very disturbing, and that's a problem. But we have a message, and I'm sure that it's going to pop out very soon too.
Okay, so while we are
Yes,
waiting for you guys' introduction, just a bit of background about today's session. So today's session on mergers and acquisitions in the startup space in Africa. We've um, we've um, we've sort of seen situations where startups don't um, start thinking of selling until they are ready to sell, right? So if you want to sell something, you have to start planning from day one. Startups are meant to build build for exit. That means if you are building a fintech or an edtech or whatever you are building, from day one, you are thinking for an exit strategy, even from day one, especially when you have investors. Your exit strategy can be through um, 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 selling, or it could be that you are moving to a public stock exchange. Like there are so many exit strategies, but the whole background to it is that you have to start thinking of exit strategy even from day one. And this is what Segun helps startups to do, especially in Africa. This is not a topic that is well spoken about here in Africa. That's why we are bringing in Segun to dive deep into this topic. Over to you, Mimi.
all right. Thank you so much, Mr. Pascal, for giving us a quick background story as to that. Thank you so much. And hello, Damilola Yusuf from Lagos. Thank you so much for joining. This is going to be a beautiful conversation because we have our speaker back. Welcome back, Mr. Cole. It's very great to have you back here. I'm sure you are experiencing a little bit of an internet problem, right?
Yeah, but I think it's settled now.
Okay, perfect, nice. I mean, The internet sometimes just glitches too much for us to even understand what is going on. But it's very nice to have you here. We have been waiting, and a lot of people have, we've been looking forward to your profound insights because I was saying earlier before your internet, glitched, that I've gone through your profile and you're doing such an incredible work. And so we know that today is going to be us taking a little bit from the wealth of knowledge that you have and what you do. Again, thank you so much for coming. And this conversation will take nothing more than 45 to 60 minutes at most, but 45 minutes basically. And yeah, that's it. And today, of course, for if you're just joining us and you don't know the topic for today, topic is what no one tells founders about selling their startups. And we have a couple of questions for Mr. Segun Cole, who is also the founder and CEO of Maasai. And if you're watching him, you'll see the Maasai on his inscribed right on his T-shirt, which I think is an incredible thing to do. Mr. Segun, we have established that you're the founder and CEO of Maasai. Is there something about you that we need to know, for startups that are joining us and young people who are here today? Can you hear me, Mr. Segun? Okay, before Mr. Shagan, comes up, somebody says, "Good morning, Pascal and Mimi. My name is Iyo Bossa, and I host, plan, and manage events. I hope to learn the strategies to build a good startup and factors to consider before selling." All right, thank you so much for joining us today, and I'm sure that you will, because our speaker is a well-seasoned person for that. Mr. Cole, please, can you hear me?
Yes, I can hear you clearly.
Okay, your network is better now, very much
Yes.
better. Okay, so before you glitch, I was asking, and I said that we have established that you are the founder and CEO of Maasai, and we've done a background check and we've seen the incredible work that you are doing. But for the benefit of people who are just joining us and who will listen to you, is there something about you and the work you do that we don't have here on our flyer?
So I believe that pretty much everything that I've been involved in the last 10 years has been captured in my profile. Um, but again, not many people know that I am a 3X founder with an exit under my belt and a series of failed startups and projects along the line, which basically inspired uh, what I'm doing today with my work at Maasai. And I think that personal immersion is very, very strategic to the roles that I play today because without them, I don't think I'll be here.
Yes, and I think it's very I don't know how the word to use, but it's very beautiful when you say a number of failed business because it's important that we acknowledge that. And I think that's a very very beautiful thing to acknowledge as so somebody such as yourself and people watching as well. Thank you so much for that. And Mr. Cole, please, can you hear me? Um, I'm just checking to know if you can hear me, Mr. Cole. Can you hear me, please? Please, if you can, if you're listening to me, just let me know if you can hear me, so I'll be sure it's not my internet.
Yeah, I can hear you perfectly.
Okay, perfect. It went up for a bit. So speaking of exit, I saw something on your page. It's not here. The questions I have here is not it's not part of it, but I saw something on your page. I really just in I just found interest in that particular thing you said, and I think that's going to start the conversation that we're going to have today. You said we are building a generation of startups that can't exit. Please, I would like you to say something about that because I saw it on your profile and then I said, "Why? Wait, what? This is quite an interesting, take for somebody to say." So please, I would like you to say something as regarding that.
Yeah, thank you very much. That statement of fact goes way back to investments, right? And the fact that even from the first engagement between a startup and investors, it's almost something that people want to shy away from, right? Just to confirm if you can still hear me.
Yes, I can hear you. Please go ahead. Yes, I can hear you.
Great. It's almost something that people want to shy away from, right? In some, because I've been privileged to be uh, on the sidelines of different investment conversations, right? Even on the part of investors, they want to shy away from the conversation of exit. Some founders buzz me almost every day saying, should I talk about exits, right? While engaging a VC, right? Because it seems like even VCs don't want to hear you talk about exit. They want to hear you that you are in that company for the long run, right? So people shy away from that exit conversation because it's more like, oh, why do you want to discuss exits? We want you to be in this for 10 years, we want you to IPO, right? We want you to IPO, and that's how we want the trajectory to be, right? But let's be realistic. Let's be realistic when it comes to the African market. How much of that is achievable? How much of that is feasible given the current context of our tech ecosystem and culture, right? So when even from that fundamental perspective, we are not addressing exits from day one, then nobody is keeping exits in mind. Exits is just considered as an afterthought, something that we only think of when we cannot raise our next round of funding, right? And with that, that's why I made that statement that look, we are building a generation of founders that are not building with exits in mind from day one, right? They are only considering exits only when they cannot raise their next round of funding. And that is when it's the whole fire brigade approach. And then
Yeah.
the same investors say, oh, look, unfortunately, we can't provide you follow-on funding. We have to, you know, re-strategize and keep this allocation left.
Are you there? Please, can you hear me? Okay, if all right. Um, please, if you're just joining or if you're listening to me, let me know if you can hear me so I'll be sure, you know, if I need to adjust or something.
Yeah, I can hear you. I think it's
Okay.
Segun's network.
Yeah, I think it's his network. Okay. Let's just give him a moment and then he can come back. Hello Damilola Yusuf from Lagos. Very nice to have you here. Yes, our speaker will be back very shortly. Shola from Abuja. Thank you so much for all the messages. I like that we are all here. Okay, thank you so much. Yobasa for saying you can hear me. Thank you so much. He will join in very soon, and then we can continue with the conversation. But in the meantime, if you have any question you would like him to answer, or anyone else, please just drop it in the comments or just comment it, and we will answer it. Please just do that, and then we'll be back.
Yeah, hello. Hi, Mimi.
Hi,
Okay.
Segun, can you hear me?
Yeah, I can hear you
Welcome back,
perfectly.
Mr. So.
So I've been switching between different kinds of Wi-Fi. So sorry.
No
This is Nigeria
problem.
that we live in.
Yes, we understand that. Okay. Yes, you were saying something about VCs and exit and how people want to excuse that
Yeah.
conversation
So I
because
said, yeah, I said it goes as far back as the investment journey, right? The first initial engagement with investors, right? Where founders don't even know how to address the exit conversation. Investors don't want to hear founders talk about the exit conversation. So everybody just puts exit on the sideline. The idea is that the power law kicks in. We want you to return uh, 10x of the fund, right? So that's what we want you to do. Build fast, hyper scale, blitz scaling, grow as fast as possible, IPO. But let's be realistic. This is not Silicon Valley,
yes.
right? We don't even have the benchmarks because we don't have enough data, right? So when you shy away from the exit conversation and the founder at the end of the day doesn't even meet the expectations that are set, and your default response to that is that you're not going to provide follow-on capital to that founder because unfortunately they are not working in tandem with the power law, we are automatically building a future of founders that are going to fail woefully at exit. And that's why you have the African tech graveyard and so many graveyard articles out there, because you go backstage and you see that even when these things were, even when the founders communicated to some of these investors that, hey, look, these are the problems we're having, there was no conversation of, oh, let's see how we can get you acquired or anything, or let's see how we can exit. Everybody just saying, okay, how do we get our money back? But there was no structure in terms of getting that liquidity back from the founders. It was just more of either introducing them to other investors. But how does that work? If I'm a new investor and your current investor is introducing it to me, but they're not going to be part of that round. So if your current guys are not investing in you, and it's not an issue of, oh, we're just pre-seed investors, we're not seed stage. It's an issue of they are seed stage, but they're not investing in you again. So why should I invest in you when even your
Yeah.
people don't believe in you? So
Right.
beyond that kind of structure, there's really no structure on ground for supporting them in that exit conversation. So those guys just wake up one morning, they just come on LinkedIn. Some investors even saw, they read about the shutdown on LinkedIn, just like everybody else. Like, what's going on? And the founder is like, yes, I'm done
Yeah.
and I'm moving on. And that's it.
Right. So
So we're building a generation of founders that cannot exit.
right. Thank you so much for that very beautiful insight. That is very insightful. Thank you. You spoke about VCs, and we just really need to ask you these questions. What role do you think VCs and investors play in the exit decision, and how can founders avoid being pressured?
So to be honest, investors play a very significant role, right? First, they have that fiduciary duty, right, to their limited partners, the LPs, right, to generate a return. No doubt about that, right? And exit is primarily a way to achieve that, right? Speaking of returns and all of that, but again, roles that investors can play, they can be very invaluable advisors, right, from day one. They can be advising because, again, some investors just write tickets, no follow-up, nothing. Just like, oh yeah. And I call them, I've talked about these things, so I've even labeled them, right? Before anybody even started talking about these things. I call them discovery tickets. So it's like we're just discovering. So we just write small tickets here and there, you know, 50-50, whichever works. If it doesn't work, no follow-on capital, right? And the bad thing about this is that some of these investors, I also call them in some of the content I've done in the previous year, I call them celebrity VCs, right? So a lot of founders want to they have names that they want to receive money from. They have names that they want to receive VC capital from. But unfortunately, these celebrity VCs that are just writing discovery tickets, right? They already have it at the back of their mind that, look, if you don't meet those KPIs, if you don't meet those expectations, they are not providing any follow-on capital or support, right? That was the idea, that was the goal. It was just to see which one will work, which one will not work. So let's put money everywhere. Let's put money in Kenya, let's put money in Egypt, let's put money in Lagos, in Nigeria, let's put money in South Africa, right? If Nigeria doesn't work, we've already hedged with Egypt. So you have received checks from a discovery VC, a celebrity VC. Unfortunately, when that celebrity VC doesn't invest, other VCs that are not celebrities would say, if the celebrity VC is not investing in you, this popular brand, so why should we invest in you?
So I can't, yes.
So I can't. Unfortunately, founders don't even know. They have no, their own is just, let us raise investment, let's get this money, let's get the money, and we think of everything else. So if you have such investors, they can't even provide you that support. That's why I said invaluable advisors. They can't even provide you that advice, right? Then again, I advise a lot of founders, because it's one thing to raise money from an investor. It's another thing to raise money from an investor that has a big portfolio of startups, right? Because if they have a big portfolio of startups, I'm not saying it's a bad thing, it's a good thing. I've seen some VCs that have a big portfolio and they are supporting founders back to back, providing that niche support. But there are some VCs that they have that large portfolio, but they have limited resources to even dedicate time. So if you're a founder that wants to receive money from a VC because they have a big portfolio, but you are not putting it in mind that with these people be able to give us, I don't know if you remembered this Silicon Valley Bank crisis, right? That is when a lot of founders knew that their investors, they don't even have investors. Because when some investors were reaching out to their portfolio companies, what do we do next? Your funds are trapped. How can we support you? How can we provide you some bridge funding or some extension, right? Call it whatever name. How can we provide you some money to help you to, stabilize? Your employees are not getting paid because your money is trapped. How can we? Some founders did not even receive any support, any call, nothing. Some investors just come, hope our money is okay. So invaluable advisors, investors, the roles that they can play in this exit decision, right, are invaluable advisors. Like, okay, what do we do next? What can we salvage, right? Who can we talk to? So that's one. Again, providing those insights, providing connections. I said in one of my posts, why would you be a VC? There's a platform like Maasai that can help that startup get acquired, and you're not engaging. You're not providing connections. Then what are you doing? So basically, but what I would say is that founders are basically the majority owners and the final decision makers, right? So to avoid that pressure, founders can be proactive by aligning with investors early, discuss exit timelines, discuss expectations from the very first investment. If the investor is not discussing it, you discuss it. What are your exit expectations? How do you view exit? Don't be afraid to ask this question, right? Another advice I'll give founders is build a very strong board. I'm speaking from experience, right? And ensure your board members are aligned with your long-term vision. These are things that you can do, because it's in those moments that you get this kind of support, right? And basically, know your worth, right? A well-run company with strong metrics and clear growth path would give you the leverage and ability to say no to certain things.
I think that if we stop this conversation here, I think that we've gotten enough to make any startup really successful. Thank you so much. That was a really profound. And if you're thinking of joining this conversation, I think that we have had we have had the source that we need from this conversation. This is really beautiful. Thank you so much, Mr. Cole. The other time we were talking about startups in Africa, and sometimes why they fail, and sometimes why you bring some different models from the Western world to Africa, it does not work. Some people say it's because we have some sort of cultural differences, and some models that will work in the Western world might not work in the African market. And so this leads me to the next question for you, and it is: are there cultural or regional dynamics that make startup exits in Africa uniquely different?
So again, this is a very good question, right? A very, very good question, because again, speaking of cultural and regional dynamics, right? I would say absolutely, absolutely 100, right? The dynamics are way different, right? The concept of building and selling a company is not yet as ingrained in our culture, right, as it is in Silicon Valley, right? So there's a high degree of that founder attachment to their companies. I meet founders so every day. Your startup is your baby. The average African founder, your startup is there's this strong attachment that they have to their companies,
Attachment, yes.
right? And sometimes that makes it very difficult to let go. You hear so many terms like fail fast, fail forward, default alive, and all of those things. It's very hard for them to let go. They are seeing the signs, but they are ignoring it, right? So there's that strong attachment, right? And it's difficult to let go. But additionally, basically, like the fragmented nature of African markets, right? It means that a successful company in one country, right, may need significant localization to be valuable in another country, right? And
Right.
basically, that lack of reliable public data is a big problem, right? And that can also make, in my previous conversation, I was talking about valuation, right?
Yeah.
With no data to benchmark, right? It just makes the issue of valuation more challenging, right? But again, this is where firms like Maasai come in. Uh, I would sell that shamelessly, right? That we help bridge that gap by providing the expertise and data that African startups need to navigate the unique challenges that they are facing. But for cultural and regional dynamics, right, totally different. Even
Right.
down to fundraising, not just exits, the kind of support. Yeah, in Silicon Valley, do you know how many African startups are running to Silicon Valley every day? Every day, you don't see someone post on LinkedIn. I'm in Silicon Valley. I'm looking forward to meet with investors. I'm looking forward to meet with blah 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 blah. I'm there for 2 weeks. Even our investors, everybody running Silicon Valley, because in Silicon Valley you can just have coffee with someone that will be like, "Oh, nice, I love you, I love this," and they wire $2 million sharp, right? Unlike Africa,
Africa.
you bring your father, you bring your mother, you bring your ancestors, all of you sit
You.
down and do blood covenant before you are able to secure 15,000 USD. Because that angel investor is thinking of putting that money in real estate in
Yeah.
Ikoyi or VI. So again, if fundraising is that hard in Africa, how much more exits?
Yes. Thank you so much. I like how practical you are when you answer these questions. It's like you
Yeah,
don't wait for
that
the books. It's very
that's why
practical.
we're
Thank
here. We're not here to speak English. We're here to break it down.
Obviously, thank you so much. And you seem very,
Yeah.
very passionate. Well, but I mean, I would be passionate if I founded Maasai. I would be as well. And my
Yeah,
next
because
question is,
because 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 the African tech graveyard. Look, there are people that will argue with you that in terms of the conversation of graveyards, uh, even places like Silicon Valley have it more. No argument on that, right? There are people that would argue with you that, in fact, the amount of shutdown is more pronounced outside the African continent. No debate whatsoever. This is true.
mm,
We're a nascent but growing ecosystem. But what makes our own much more profound is that 90% of our capital, if not 99, is foreign investors.
Yes.
And they really have no structure. They are just investing and copying their Silicon Valley model. And that's why we're having issues. So when you know that 90% of your capital is coming from external, you can't really afford certain kind of expensive mistakes, because they will just blow things out of proportion, right? So until our local investment community comes into match with capital expertise and local contextualized support, we will continue to see messaging architectures around screaming and exaggerating on, oh, the shutdown, the this and the that, but it's still a sad occurrence.
Yes, it is.
And can we do things to avoid them? Yes, we can. Let us stop dropping the ball and shouting and playing the victim card.
Yes, yes. No, now talking about victim cards, what are the common due diligence pitfalls African founders face when selling? What do you think they are?
Number one, poor financials, poor financial records, right? Lack of clean, audited financials is a major red flag for any kind of buyer, right? You see, even in fundraising, right? Even from your deck, if there are things that you are not getting right, or you have not done your homework in terms of your financials, which will basically help the investor calculate their return on investment. Simple, right? If you don't cross your T's, how we always say it in Nigeria, cross your T's and dot your I's when it comes to that. In fact, you review more than you want to, and you open yourselves to more questions than you are even prepared to answer. That's one. But back to the exit conversation, right? Mimi, can you hear me? So you expose yourself to even more questions than you are ready to answer, right? And back to the exit conversation, it's even harder because the due diligence, I keep on telling a lot of founders, the due diligence for exits is way more, right, than the due diligence for fundraising, right? So a potential acquirer, if most importantly when you're engaging a sophisticated potential acquirer stroke buyer, right, that have accountants in that conversation, that they have advisors, expert advisors and specialists, right, to support that acquisition process. There's going to be a best practice standardized due diligence process run by that accountant and that advisor, right? And sometimes they even bring on legal advisors. Sometimes they even bring on tax advisors. So you have a robust due diligence process. You can't come to that kind of table with poor financial records, right? You need to have audited financials, but if you don't have that, it's kind of like a red flag. Some of them might not even, we have seen acquisition conversations that fall through the cracks because of poor financial records, right? And you don't expect them to do that assignment, that homework for you. Then also, like I said, sometimes they come to the conversation with legal advisors. You're having legal and compliance issues. If I have like an inconsistent legal entity structure, that would definitely raise problems for you, right? Because again, your structure, they cannot even understand how did you even incorporate this, which one is the hold co, which one is this one, who are these shareholders, who are these directors, who resigned, who left with a scar on the table, right? And by scar on the table, I mean situations where certain advisors or co-founders or stakeholders leave the company with like maybe significant amount of equity, and it's not even defined, right? So if you have that inconsistent legal entity structure, lack of proper employment contracts, right? Even down to signed merchant contracts. In fundraising, some of these things you might not even have them signed, right? The investor just wants to invest, right? They can overlook it and focus on your traction. Traction, milestones. But the acquisition, proper employment contract, it can shoot down a beautiful acquisition process, right? And then maybe even IP ownership gaps. You are trying to sell your startup, and the IP, right? The IP ownership is still in the name of the CTO co-founder that has left. So the CTO owns the IP, but you want us to acquire and do what? Be having a
Mr. Cole, are you there? Um, okay. I think Mr. Cole has a network problem, but if you are still here,
Hi, baby, can you hear me? Okay, so while we're waiting for Segun to
yeah,
join,
Pastor can hear you.
okay.
Maybe it's not here.
I think
Yeah.
she's
So
also
I
having
was I
issues
was
with her
touching on the
network.
fact that inconsistent legal entity structures, lack of proper employment contracts, right, and IP ownership gaps could definitely pitfall your acquisition conversation even before it starts, right? So these are
okay,
some of the pitfalls that African founders face
right,
when selling, right?
yes.
And with these kinds of issues, anything can happen, basically.
Right. Thank you so much. This has been such a beautiful conversation and very rich as well. And I'm sure that people who are watching and listening to this and following this conversation, have gained more than enough insight for their startups. And so we have just two more questions for you, Mr. Cole, and then um we will wrap this up. But it's been a beautiful and an insightful conversation. Thanks to you for sharing your thoughts with us. And our next question is we really just want to know what inspired your passion around startup mergers and acquisition space in Africa, and why do you think it's still so under discussed in startup communities?
All right, thank you very much.
Mr. Cole, did you get
Absolute
that?
question. So my
Okay,
passion
all right,
comes from yeah, my passion comes from a very deep-seated belief in the potential of African innovation. I strongly believe in it, right? And we see incredible founders building world-class companies. I mean, world-class, right? Even take our Egbon, Inya Boyeji, two-time unicorn founder. Very soon, three-time unicorn founder. We have our eyes on Move, and maybe even four-time unicorn founder when in Etana, the hub launches and kickstarts, right? So we see incredible founders building world-class companies, right? But the narrative usually stops at the funding round, right? Um, and the final chapter, which is the exit, is what validates an ecosystem. I, I have been screaming to those at the back, right? This is what validates an ecosystem. M&A in Africa is under discussed, right? Largely because the ecosystem is still maturing, right? The ecosystem is still maturing. So for a long time, the focus was on survival and raising the next round of capital, right? But there's also a perceived lack of viable exit opportunities. And this is a
Right.
big debate, right? A perceived lack of viable exit opportunities. However, as the ecosystem matures and companies scale, right, M&A now becomes that critical liquidity path for founders, employees, and even early investors, basically, right? So we need to normalize these conversations as a healthy and vital part of our startup life cycle, basically.
Right. Thank you so much,
And
Mr.
and then
Cole.
and then I think to add to that is that um, stigma. There's this stigma of if you are talking about startups, then you are a failure. We can even see a recent one that just happened. You know, we can see a recent one that just happened recently. If you are discussing startups, you are a failure. If you are discussing exit, you are a failure. So a lot of people shy away. There's that stigma that or more, I don't want to be seen as a failure.
Right.
I don't want to be seen as a failure in the ecosystem because it's going to be also very hard to raise follow-on capital. Like this, that's the guy that failed. That's the babe startup that failed. You know, nobody wants to carry that stigma. Oh, you were the one. Oh, we read about it on
Yeah.
Tech About. You know, so that stigma. I'm telling you, there's so many startups facing imminent shutdown right now that if they don't overcome that stigma, in the next 2 months, we're going to hear about their shutdown. Unfortunately, you would recall this conversation when you see it happen. There are so many startups that are about to shut down, but they don't even know how to even open their mouth and tell their investors. The investors are not even following up enough in terms of operational due diligence to be aware of it, identify it, and begin to structure how to address it. So, investor in the dark, founder in the light but remaining in the dark, and they have 3 to 4 months of runway left. But the stigma, right? They are just keeping quiet. Then they have drafted their LinkedIn shutdown speech and press release. Then maybe it's when one API is failing and somebody's coming on Twitter and saying, what's wrong with these people now? We just signed up for their API to use it and it's not working. The founder just comes, bam, is with a deep felt pain that I addressed today that we're shutting down. We thank you to our investors. Thank you to well, come on. We can do better than that. Mimi, are you there?
Mimi, are you there? I think she's having issues with her network.
Yeah. Also possibly because of the rainy situation that we're having. So everything's affected. I've switched from Starlink to main one, and everything's just unfortunately.
Okay,
Yeah,
okay.
but that is why I think the topic of M&A is largely still under discussed in our startup communities. Nobody wants to be identified as a failure. Nobody wants to be in that failure circle. But again, too late.
Okay, so let's move back to the startups here. So we have a couple of introductions. Let me see if we have questions. So guys, if you have questions, this is the time to send in your questions while we are um rounding up for this conversation. So we have very spheres. Okay. So I'm just trying to check in for questions. So I have a question. I have one question from a founder here. What would you advise founders who are still building to do from day one and planning for exit? Hi, Chego, did you hear me?
Sorry, Pascal, I did not
Hello,
get
can
that
you hear me,
question.
Segun?
Come again. Yeah, I can hear you
What's
perfectly.
your
Please come again with
advice
that
for
question.
startups to start planning for exit? What's your advice for startups to start planning for exit from day one?
What's my
Did you hear me?
advice for startups? No, it was breaking. What's my advice for startups? What?
To start planning for their exit from day one.
All right. So again, right? I was saying it in one of the answering to one of the questions that Mimi asked in terms of how to do this, right? Number one, exit is not an afterthought, right? Exit is even just the understanding that exit is something that you plan from day one, right? Is very important. So you have that conversation. If you are venture backed, before you receive your first investment ticket, you have that conversation with the investors in terms of exit timelines and exit expectations. So you have a feel of the kinds of investors and the support that they are willing to provide. Right. So let me go a little step deeper. Right. So a lot of founders don't know about this because they are so eager to receive investments. Hi, Mimi.
I at least a
Yeah.
little bit, but
So
yeah.
they are so eager. They are so eager to receive investments, right? And sometimes, because of the context that we find ourselves in, founders are very desperate. So they will literally sign anything. They will literally accept anything, right? Mostly in terms of safe, the standard documents that we use to raise investments, right? Um, Unfortunately, sometimes founders don't even go through those documents. I tell you for a fact, most pre-seed founders don't even review the safe documents. They don't review the term sheets. It might sound like a joke, but that's what is happening in the African ecosystem. Let me share an analogy that might sound like a joke. So we saw the Ashake and Olamide uh, whole issue, right?
Yeah.
There's a video circulating online where Ashake said he did not review the agreement Olamide shared with him. He signed immediately
Without reviewing.
without reviewing. It's online. So that shows you that the excitement, like Olamide wants
He's
to
about to
sign
sign
me.
me. Yes.
All the suffering I've been going through,
Ah, there's a way
all
out
the
now.
back to back. A great Olamide has come. Baba, give me the contract. He said it. Ashake said it is on record. Ashake said Olamide told him to go and review with his lawyers.
Yes.
And Ashake said, review, kwa?
Review.
Review. Baba, as
It's
I'm sitting
working
down,
now.
I have reviewed. I've
Thank you
reviewed.
so
We
much.
just reviewed now,
Yes.
right? And he signed.
Mm,
Unfortunately, Ashake became big. And now he wakes up and realizes that, this agreement is not really favorable to me.
yeah.
This is what is happening in Africa's tech ecosystem as I speak to you.
And it's very sad. And it's a good thing that you've spoken to us. Yes. So
Yeah,
Mr.
because
Cole,
yeah, go on, please.
okay, yes. I was just saying that we are running out of time, and we have
Mhm.
people who, have to go back to work. And so I just want to ask you one last question, which is, what is one thing you will want startups, especially for young people who are, trying to navigate, the world out there? What is one thing about this conversation you would like them to take home with them? What is one takeaway you would like people that have heard this conversation to go home with today?
Exit is not a sign of failure. I'll keep screaming it for people at the back. Exit is not a sign of failure. Please don't fall for that perception, right? Exits are a measure of success. It's a natural and healthy part of a mature startup ecosystem. A very good question to also ask is, when do you start thinking of exits? Optimal timing is very key. You need to know, at Maasai, we can help you with this. You need to know when to exit. This is why you are seeing a lot of startup graveyards. Nobody will talk about it online. We don't want to give our foreign investors that perception. But even seed stage startups don't know when to exit. They don't know the signs to look out for. They don't know when these signs are converging and they should begin to exit and start an exit conversation. But I can tell you for free, if you are 6 months to 8 months of runway left and you are unable to raise capital, kickstart your exit conversation right away. Come to Maasai, let us support you and help you to do this, right? So again, plan for exit from day one, right? It makes you attractive and valuable. And how do you
Thank you
plan
so
for
much.
this exit? How do you plan for this exit, right? Let me just chip this in.
Okay.
Again, while you build, start thinking of who can, if we're to exit today, who can acquire us? It's a very good conversation, because then you begin to map that universe, right? And then last but not least, dear African founder, you are not alone. You are not alone. You are not alone. A lot of mental health and issues and all of that, you are not alone. There are resources, advisors, and platforms like Maasai dedicated to helping you navigate this process. Thank you.
Thank you so much, Mr. Segun Cole, for giving us such an insightful conversation and really, helping us, around the startup conversation and really answering the hard questions and, confronting the conversations that may seem hard for people out there. Thank you so much. And thank you everyone
Thank
for joining as well. Yes, thank you everyone for joining as well. And thank you for being with us all through this moment. Thank you so much. So for everybody asking questions, we can't answer all of your questions, but of course, you can always follow TEDxMaitama Official on LinkedIn and every other social media. And our speaker is at Segun Cole on every social media, I believe. And my name is Mimi Okana, and it's been such an amazing moment with everyone here. Thank you so much for joining, and thank you, Mr. Segun Cole, for such an inspiring
you.
session.
Thank you.
Yes,
Thank you.
until next time. Bye bye, guys.